Hey, everybody. Welcome to week 164 of the Crazy Train. You know, this is crazy. I went into the Harris Y for the first time since March 13, 2020. I've been paying my dues the whole time, but today was my first day because it's been so rainy, I couldn't do my Murph outside. So I did it inside. So anyway, we have got a fun lineup for you today and next week too, because we're talking about insider fraud and stealing. Unfortunately, we have war stories of personal testimony where we have been victims of it. And so we'll probably talk about some of that, but we're going to talk about what are the things that you can do to spot some of this stuff. And so oh my gosh. Anyway, just an insider story. I'm just laughing. So anyway, that's what we're going to be talking about today. Hit us up with the Q&A, and you can hit us up in the chat if you want to harass us. And I am wearing the only thing that I could think of, like, come clean. So that I'm wearing, that's why I'm wearing clean juice today. So come clean if you're doing something. And you know, the stats are crazy. I don't know if anybody saw the stats that we posted up on the website, and I can send I'll see if I can add this thing to it, but they say that 95% of businesses encounter problems with employee theft. Now, at what level is that? You know, is that time theft? Is it Jolly Ranchers and the candy jar theft? You know, or M&M's at one point that used to be an issue for him. No more. He's gotten clean. He's gotten clean, geez. So I don't know, but I do want to get into things, especially for business owners, like, how do I know? And what's crazy is I've lived through partner embezzlement. That is not fun. It is the most disappointing and act of betrayal that I've experienced. I haven't had, you know, but I felt like I walked in on my wife with another man, is how I felt about it. Now, my wife thinks it's a bit extreme, but I love this guy. I trusted this guy, and I caught him twice, you know, and then you feel stupid because it happened on your watch right underneath your nose. Like, man. So I think we want to talk about some of those things, and questions. All questions are fair game for us, obviously. If you guys have stuff that's outside of the, hey, what about theft and sorry. I can't go into why I'm laughing, but anyway, it is funny. So
you're just not going to fix that, are you?
Evidently.
Yeah, one job here for now and next week.
And Jack is taking this call from the car at the Whitewater Center. And yes, they are still running the Whitewater Rapids in the rain unless there's lightning. So
I got to get a car like Jack's, man. That sunroof looks
that's
amazing.
a good one.
So you got to say something.
That's
so
a
we can
big
see the
sunroof.
background. That's awesome. What kind of car is that?
Well, I don't want to say because I'm modest about it, and it's not a new car, it's a used car. So, but yeah, it has a pretty nice sunroof, which is great, except when you leave it open and it's hot, and then you come back to the car and it's super hot. So,
oh yeah,
yes, but I am coming to you live from the Whitewater Center, pouring down rain. I was hoping that maybe it would be lightning before I got here, but now that I'm here, I don't want it to lightning because I already went inside to go to the bathroom and I'm soaking wet, so may as well just roll with it. So yes, hopefully you guys can hear me okay. Looks like I have enough bars on my phone, and I'm gonna hook up my computer to share some things that I found on this particular topic. Being the statistics guy of the group, kind of thing. So
yeah.
But yeah, that's what's going on.
You are kind of the Cliff Clavin of the three of us, I think. Just saying.
Somebody has to fill the role, and I'm just happy that it wasn't me, because usually I'm the one that has useless facts. So it's really nice to be like, guess what happened today, honey? I wasn't the guy that threw out some useless facts. It was somebody else.
You are more
Or
of a
dad
Rain Man.
jokes.
I mean, you
Yeah,
qualify as Rain Man.
So it's like Jack and I are, I'd imagine we'd have a fun time in like 80s Trivial Pursuit.
Yes, definitely. And then if it's, you know, Star Trek, Star Wars based,
I
mean,
was
that
gonna
would be
say,
a
man,
bonus.
oh,
Yeah.
that could be
Yeah,
massive battle.
Bar trivia night. That's good times. Although I went to the bar trivia once at Summit Coffee in Davidson. That's got all the Davidson College professors, and I was shamed and humiliated.
Oh,
So, I'm like, you are pulling out some obscure stuff. So, yeah. Anywho, so is it okay if we hop in, Gary?
rock and roll, man.
All right, cool, man. So, you know, when we were thinking about different topics, you know, we just thought, okay, well, what's one that we really haven't touched on that does impact a lot of our clients? And it is the insider fraud, as Gary said, at the outside of the webinar when I was not managing my time very well and using the restroom. Did I say that out loud, Jack?
Yeah, you did.
Anyway,
Sorry.
So what the hard part about, you know, the CPA world is that, you know, people have this mistaken perception that I will somehow uncover fraud. And, you know, even if you have like an audit, you know, or review that's done by a CPA firm somehow, or just do a tax return. Well, how'd you not know? And the answer to that is, well, how'd you not know? Yeah, sure, it's your company, but the reality of what we do, you know, this is just more for the education of like, look, dude, I mean, if this is something that really concerns you, then you need to take some serious action. The reality of what we do at the highest level is that, you know, whether it's a tax return or an audit or a review, we're looking at a very high level. I'm talking like 50,000 feet, you know, do the financial statements make sense and are presented according to GAAP, you know, or, you know, follow or generally can follow the tax code. So, you know, if your gross profit percentage is off by 5%, I'm probably going to say something. If it's off by 0.5%, I'm probably not going to say anything about that. But at the same time, 0.5% in a large enough company could be millions of dollars. But, you know, you could have that in material fluctuations just as easy as you could have that in fraud. And it's not something that's really relevant to the overall financial statement. So then if you dive into, but I was audited, how did you not know? Well, in an audit, again, you know, the whole purpose of an audit is to, you know, ensure that your financial statements don't have material departures from GAAP. But the way that we do that is we just assume that you don't know what you're doing. You know, so we're doing some limited testing and external verification of your financial statements to make sure they're right. So we do, you know, confirmations with your bank to make sure that's really what you had in your checking account. You know, based on the size of your company, you know, we're going to take a look at some transactions that are large and then a group of transactions that are small to see if they generally, you know, make sense and were recorded correctly in your systems. And we are going to ask some questions about internal controls, but at the same time, you know, internal controls, for those that don't know, are those things that you have in place to make sure that fraud doesn't happen. But generally, you know, we're focused on making sure that the balance sheet and the income statement aren't lying to external use of the financial statements, which are usually your banks, you know, which generally we're looking for, like, Gary, you hid the liability because you were trying to get more money. Or Gary, you overstated profit because you're trying to get more money. Typically, we're not looking to make it go the other direction. You know, so just understand that, you know, going into an engagement. So if you take like the next tier down of what we're going to look at is that, you know, if you generally are not good at producing timely financial statements, you know, meaning like if we're starting the request process in February, March, or April, and, you know, you're like that habitual, you know, summer, I'm still messing with them, you know, my accounting team's still messing with them, you know, we get them and, you know, the balance sheet still has negative assets and, negative liabilities, which shouldn't have, and they just look messy. Your bank accounts aren't reconciled. We're generally going to tell you that is a sign of three things based on our experience. One, your team is incompetent. Two, or just don't know what they're doing. Two is you have asked them to do too much and they are not taking this job serious, and they just don't have enough time to take this job seriously. Meaning like they're also the HR department and the IT department.
Mhm.
And then three is you're getting stolen from. I mean, it's only one of those three. Like there's no other, in my experience, there's never been another reason that that's happened. So just understand that that's really the best that you're going to get from us. Now, independent of that, if you do ask the question, well, Gary, how would I know if someone's stealing from me? Like, what do I need to have in place? Well, get out a sheet of paper and a pencil.
There you go.
There you go. What I would tell you is that, it typically starts with someone who feels underappreciated by you, that feels that they're entitled to something. And it typically starts with like, I'm going to take my family out to dinner and put it on the company credit card. I'm going to go to Target, and put some stuff on the company credit card. And, it's sort of like that. Well, they didn't catch that, and then it just starts to escalate to, well, if I set up a fake company where I'm the supplier, they never look at the accounts payable anyway, and it's only just a little bit. But, you go $10,000, $15,000, $20,000 a year over a period of time, it can add up to some real dollars. And especially if they know that, Gary, that you're not really looking at the financial statements anyway, or you don't understand them. You're not demanding that bank accounts be reconciled and demanding that things be timely, demanding to sign checks and look over bills before you pay them.
Yeah.
They know that you're not looking, but it typically always starts small when it's on the inside. And the general areas are just, little things like little things that I would never know. Like you could find if you looked at them, but I would never know in an audit or a tax return. It's, took the family out to dinner, set up a fake company that's now a supplier to the company. Gave myself a raise, you didn't know it, paid a family member, put them on payroll, you didn't know it. Little things like that eventually add up over time to something big. Like I don't think, in our client base, we've had lots of people that have been stolen from, but at the same time, I don't know if a single one of them was over $100,000 in a year.
Yeah.
I don't know what your experience has been, Jack.
Okay. Am I off mute? All right. Yeah, very similar, and want to share some slides or some screenshots if I can make this work, because I've said this before, very interested in the psychology of things. So whether it's in negotiations, figuring out why the other side is saying things or doing things or being irrational, or and that also applies in the context of why did that person do what he or she did to steal from a client. And so let me see if I can pull this up, because it's called the fraud triangle. And it basically, let's see, will show, and I think that the most interesting part of it is the top of the triangle. Okay.
Oh,
can you guys see it?
Look at
Advanced
you.
move.
Yeah.
I'm going to send you a
From
So-
the back of the car scoreboard.
You deserve.
For those of you that joined
Starbucks
late, I'm sitting
gift
in
card
my
from
car.
Shoemaker.
Yeah, get yourself something nice.
Hey, how about a Starbucks gift card?
Yeah.
That'll work for me.
But make
Okay,
sure
good.
that somebody inside approves it. Otherwise, it could be considered stealing.
Yeah.
Just saying.
Yes. Yes. which actually I'll tell you a funny story in a minute about those Starbucks cards and how I get them and how easy it is for me to get them. And I actually did use a set of them personally for myself because I could not, transmit them or, get them out of where they were. But then I had it deducted from my paycheck actually. So that's the
you're
way
a
you're
good
supposed to do it.
scout. Good for you.
Well, I just didn't want to get caught, right? Just kidding. All right.
You're a lawyer too.
All right. So the fraud triangle, can you guys see it?
Yeah,
The
it's
three
good.
aspects of it. Okay. All right. So, and again, this is, I am not a subject matter expert on this, although probably close to it in dealing with clients, fraudulent activities by employees and others. But so you have, and I don't like reading off things, but I'm just going to do it anyway. So you have pressure at the bottom, pressure. Why are they doing what they're doing? Financial difficulties, gambling losses, drug addiction. They could be influenced by someone outside of the organization, or they may simply be greedy and, want something that isn't theirs. Opportunity. So they see a chance and they take it. And how, basically, and we'll go into this in further detail, but unlimited access to valuable information and critical assets, the absence of controls and employee monitoring, weak security within organization's IT perimeter. Basically, all those three things are saying is you are not fortified in protecting your intellectual property and your other assets, cash assets, credit card use, those kind of things. But I think what is the most interesting thing, the psychology of it, is the third part of this triangle, which is the rationalization, so that people convince themselves they have a valid reason to commit the fraud. They might think they aren't paid enough, or there's no other way to deal with a problem, or they may think that upper management is doing it as well. So, why not me? Other people are doing it. They're spending a ton of money on galas and all these events. And so why shouldn't I get a piece of that? And so they rationalize it that way. Another, let's see if I can get to it. Here it is. Okay, is this one? Nope. This one. Okay. Yep. This one. Okay. Again, finances online, not my original content, but okay. Red flags. And it's funny because as we go through this, you might say, oh gosh, I need to look into my organization as soon as I get off this call, or you may actually be doing it as you are listening to us speak. But so what are the most common red flags? Living beyond their means, financial difficulties, close association with a vendor or customer, excessive control issues or an unwillingness to share duties, irritability, so kind of a change in behavior, wheeler dealer attitude, BMOC, big man on campus kind of attitude, and then problems at home, whether divorce, family, death in the family, whatever it may be. I think also as part of a subset of the unusual behavior, and if we have time, I can tell a story about a new controller to a company that over the course of time, but in a short period of time, was asking for more accessibility to books and records, and the ability to issue credit cards, to pay bills. And these particular owners were unusual in the sense that they kept those controls close to them, and where in a business normally their size would have others that would be entrusted with those the keys to those accounts, literally, figuratively. And just because they were on the verge of giving this person control, when an outsider in-house counsel for another company said, hey, by the way, you should look into this. And like I said, I can tell that story later. But and then also continuing on with the slide, concealment methods. So creating fraudulent documents, altering paper documents, altering electronic documents, creating fraudulent records, and those kind of things. And Adam was alluding to those kind of things. And then how do people do it? Billing, cash on hand, just plain out theft and larceny, check tampering, payroll, skimming, and then cash larceny, which I think is a subset of those. So, and then, we can go into other statistics, but that is kind of like a framework of just what I found, and is a great way of summarizing kind of the psychology and the general statistics of employment theft. Some statistics before we get into the war stories, that the Association of Certified Fraud Examiners estimates that organizations lose 5% of their annual revenues. That's revenues, that's top line, because of fraud. That amounts to nearly 5 trillion lost to fraud on a yearly basis. 40% of these losses typically come from insider occupational fraud, which is essentially 2 trillion a year. And the average cost per incident is $412,000. So, talking about some pretty significant numbers. Anyway, I will stop there with all the Cliff Clavin numbers and see what you guys have to say about all
you
that.
are so good. You brought in some good stuff. I like that fraud triangle. I think that's exactly right. The rationalization, man. Whoo, all three of those things together, but rationalization, it's just the step of many steps. And it's like, once you cross the line, then the ends justify the means in so many ways. So we've got an interesting comment on the chat. Had it happen to me, 35 grand from a trusted employee who we went to church with through a credit card. Man, I got to tell you, I'll just say it right here. I am a Christian and I have lost about $1 million to being brotherized. And there like anymore, I kind of like, when they start brotherizing me, like, and give me the language up front early, I'm backing away because I just saw a scorpion. So anyway, it's sad. It's very sad. But I think that's the hardest part, Chris, when you're talking about this, because that was the thing for me. Trust was just completely obliterated, and it was more painful than the money lost. And for us, it was a lot. It was hundreds of thousands, but nonetheless, that was the hardest part. So thanks for chiming in on that. I'm sure everybody else on here, one thing that I will say, and because I was guilty, I am not a big numbers guy. I can hold my own on them, but that's not where I love to spend my time. And my first turnaround, my partner, he wasn't really either, but he had an outside CPA, kind of nefarious too. And we had an internal, once we turned the company, we had an internal CPA that was doing books and stuff like that. And so, but he had all the control. And so for people like me, and maybe like you, that, hey, your industry, your company, you love what you do, but the numbers you start glazing over, it's easy to trust and not have the safeguards that Adam is talking about, because you don't know and you don't really care. As long as the money's flowing in, it's like, okay, but you're kind of loose with it. And that was kind of my case. My partner was 20 years older than me. I had complete trust in him, and it burned me pretty badly.
Yeah,
So
I'll go ahead and give you guys war story number one. And the whole point of the war story is just to say, could that happen to me or not? It doesn't mean that it is happening to you, but it's more like, wow, could that happen to me or not? Because it's one that I think is really, really relatable. So, and this is the biggest one that I think we've seen that's happened. So we had a client, in the construction business. So Gary, we're not recording this call, are we? Yeah, we are.
yes, we are.
So, I mean, not surprising, employed some migrant labor that possibly might have been here, not through legal methods. In this case,
You sound like a lawyer now.
yeah, in this case, they were in the landscaping business. And so by by design, it was just going to be tough for them to have a payroll provider, like an outsourced third-party payroll provider, like ADP or Paychecks or whatever. So they did their own payroll. So the two things that happened, and they had a couple hundred employees, all with Juan Ramirez and 1111111111.
Right.
So the first thing that happened is the controller put her husband on payroll. He didn't work there, but put her on payroll. Wasn't for that much money, but put him on payroll. That one was bad, but the really bad one was, since they were doing their own payroll, the payroll run itself was separate from the payroll tax deposit. So pay Gary $100, but I withhold $30 from Gary's check so I can remit it to the government on Gary's behalf. And even if I'm employing legal, that was illegal, Gary. Labor, I'm still like, there's a procedure for that. I'm still supposed to do that. I mean, the technically correct answer is that you were supposed to get the person a taxpayer identification number and remit taxes on their behalf. That allows them, even though they're here illegally, that keeps them kosher with and keeps you kosher with the government. Otherwise, the government's going to come after you and say you're liable. But anyway, this person was kind of doing it half right, like actually withholding the taxes from Gary across the entirety of the company. And then, 2 weeks later, their payroll tax deposit is due. Well, guess where the payroll tax deposit went a couple times? Not to the IRS, in a separate bank account for the controller.
Wow.
And, as long as she was always in that position, it only did it a couple times. Not that big of a deal because the payroll tax deposit's late, but I always got another payroll to pay it in arrears. Well, the IRS is not a super big fan of that, Gary. They don't like payroll tax deposits being late. But if you get the mail, guess what you're also getting? The notice saying that your payroll tax deposit was late. And just whoop, nobody's going to see that. So, you keep on, you kind of play that forward from the owner's standpoint. Everything looked fine. Bank account reconciled, no payroll tax liability sitting on the balance sheet because it's been relieved. It just was not relieved to the correct party. Like there was just a separate vendor set up called the IRS that just was not actually the IRS in the books. So, and in QuickBooks, it actually said IRS, EFTPS tax deposit payment, but that's not. It's because she changed that, after the fact, and they weren't looking at, check image stock, to see what had actually happened. So lo and behold, they just start asking a bunch of questions about, so where's the cat? Like, we just don't feel like we're making enough money, start asking questions. She panics, quits. Now they actually get the tax notices. And they owed $750,000.
Wow.
And unfortunately, you owe that. Like you can get, this isn't like, put a bunch of meals on the Amex bill and I've been paying the Amex bill along. This is, no, I actually still owe the money. I was a trust for the, so my only recourse is to try to sue you to try to get the money back. So that's the worst one. And I mean, if you just think about it, it's like, they're looking at financial statements, stuff appeared to be on the up and up when they looked at it, and at the same time, $750,000 stolen from them over the course of 2 years.
Wow.
That's the worst one. I'm sure there are worse that are out there, but that's the worst one on the inside that I've been involved with. And that seems like, that could happen to a lot of people pretty easily that do their own payroll.
Yeah, that's good. Well, we got a couple questions that came in from Derek that tie right into this. Got a call right as you started, so these might have been answered, but no, they weren't, Derek. Here are the two questions. One, do you typically recommend taking legal action when there is theft? Ooh, that's a good question. And second, if someone chooses not to take action and the fraudster was hired by another employer, would you let them know?
Jack's department.
Ooh, that's a lawyer question.
Yeah, I have to tell you what I would do, but what I would do probably would not be legal. So.
So yeah, I thought you might be punting it to me, so that's fine. So as far as taking legal action, I'm going to give you the typical legal answer, which it depends on a number of circumstances, which is, you know, how red-handed did you catch the person? If there's some speculation or, you know, that kind of thing. I mean, but if you got them dead to rights and there's no issue that it happened, you know, the amount, then it depends on whether or not you want to pursue this person. Some of the psychological things that we talked about a few minutes ago from these charts, you need to think, okay, is it worth pursuing? Like, is there some empathy that needs to be employed to understand what's going on if they want to pay it back? If they are basically snubbing their nose at you and saying, well, you know, come after me if you want to, then, you know, you still need to employ reasoning in doing that and not get emotional and say, oh yeah, well, I'm coming after you. Because I've had that situation where emotions, despite my efforts to keep emotions out of it, got the best of a client owner and went after this person, and we won. We got the judgment, but there was no money to pay.
What'd you
You
get?
know, and
Right,
that's
exactly.
always the problem. Yeah, so you have a great piece of paper that you can file, and maybe if they win the lottery or if they start working, you can garnish their wages and get it, you know, little by little back. So there's a practical analysis for that. As far as if you don't take action and they're hired by another employer, would you let them know? So in continuing the story that I started with a few minutes ago, which is person gets employed in the finance group and starts asking questions and wanting more access to be able to pay things and do his job. You know, that's like, hey, you hired me, I just want to do my job. And, you know, I feel like I'm restrained from doing it. So please give me the passwords, give me access to the bank accounts, put me on the signing, on the signature card, all those things. And as it turns out, I received a phone call from in-house counsel of this person's prior employer, who has found significant fraud, like, you know, 6 figures, almost 7 figures. And actually it was probably more, it was over 7 figures when you start putting in, you know, some, maybe not some of the non-cash stuff, opportunities or things that were spent. So the total theft was probably over $1 million. And so there was a kind of a gentleman's arrangement between myself and this in-house counsel. And the considerations were that, okay, so he's sharing information with me to share with my client to kind of go check things out. And maybe, and my initial conversation, I thought, was to join in and say, okay, let's prosecute this person together to, you know, really slam him. From my perspective, it was, okay, what did he do? How did he do it? What was his methodology? Was it all credit card based? Was it, you know, so that way we would know where to look internally ourselves. We did, the client did hire, contacted insurance company hired forensic accountants to go through everything. Fast forward to the end of the story, everything was fine, but I think only because he wasn't granted access that he was on the verge of getting. And so, you know, and then I'm thinking, okay, well, what information can I share with that internal investigation with this other attorney, if there was something there? So you have to think about ethical considerations, client confidentiality, You have to think about defamation. So what if, the information is used improperly to basically defame the person rather than to prosecute the offense? So you start getting into all those things. But what ended up happening is they figured out what the total number was. There was not theft on my client side of things. We said that if, we'll keep each other posted on what's going on. Obviously the person on our end was immediately terminated, was threatened with criminal prosecution and everything else. And if we had found something, I do not know the end of the story for that other company. And now that I've remembered, that's probably something I would want to do and go find out if they're willing to share. But and if I find out, I'm obviously we'll share with everyone here. But that's just one of the war stories in relation to the questions of, should you share if you find out somebody did something, should you share? And but I think really you use that opportunity to look internally and see what that person has done, and use the intelligence the reconnaissance to see where the weaknesses were in that other case, and then look internally and see, okay, wait a minute, what do we need to do? There was a suggestion that, for example, to recall all of the credit cards, because we don't know if he maybe has access to, 10% of them, just because whatever reason he convinced the card holder, the authorized user, to grant that person access because it was a trusted relationship, or maybe there's collusion. So all that stuff goes on. And when you're thinking about these, doing the investigation and due diligence into these incidents.
Yeah, that's good. The fact that Derek brought up, like, would you let them know, man, you run into all kinds of kind of potential legal sticky wickets there, because one is, if you know something and you don't say something, are you kind of liable? I mean, that's a question that kind of runs through my mind. Then the other thing is, well, on employment issues, like, could you come back and get sued for slander or libel, for that, which is crazy. We got this in from one of the people on the chat. It says, had a couple things here. So he says, thanks for providing a safe space to let some of this out. When I got burned, I was fearful what would happen to me because it happened on my watch. I mean, the accountant should prevent this, right? I had that same thought, and I had legal counsel who was my next door neighbor, and biggest law firm in Kansas, and they had done our buy-sell agreement. And I told him what I had uncovered, and he said, get me all the documents. So I did, and he went through them, and he goes, man, the way that your buy-sell was written, and he goes, we wrote it. It wasn't him. He's a litigator, but he goes, your partner is the beneficiary on your death, not the company. He personally was the beneficiary. And he said, you know that he has perjured himself now because his ex-wife was suing him, and she was heiress to millions. So it was ends justify the means. He had set his company up initially as an LLC, then moved to a C Corp later on, but he was paying her child support and alimony based on the gross receipts of the company early on. And so once we got into profitability, that's when he started embezzling, and he started hiding it into consulting fees to his wife. And she was a tenured professor at a university, and we paid for her to do stuff. So it was all like there. But the fact is I knew, wait a minute. And it was like almost $200,000 worth of fees in this 1 year, when we hadn't hired this outside consultant that was $10,000 a day at all. Like, we brought him in multiple times before, but I'm like, wait a minute. And that's when I found it. And then I started feeling like, well, am I liable for any of this crazy stuff that he's done? And, so nonetheless, that was some of the stuff that was going on, but I was afraid of that too. And then, you know, the fact that we had an outside CPA who was cooking the books with him and completely aware of that. But, you know, if I outed this guy, I was going to have to destroy his life, and I didn't want to do that. So just a lot of internal machinations. And here's another comment that came through. Have had several clients that literally have had an Excel document on their server or Google Docs called passwords. And yeah, they often have the keys to the kingdom. How, you know, Adam, I'm going to throw this back to you, you know, hearing some of those kind of things where you've got a controller or a CFO that wants those things. What are the practical steps that you know, a non-financial, you know, guru CEO should be doing to go, hey, this is what we ought to do?
That's a great question. So to the microphone's in the way, so I can't see. I couldn't read the other question about shouldn't the accountants have known. You know, we hit that at the start of the call. It's like what we can do is we can tell you, just like Jack kind of did with the slideshow, we can tell you where to go looking. But in terms of actually finding it as a normal course of what we do on a day-to-day basis, it's just not what we do. You know, like we can spot, you know, higher level of irregularities that you need to look into, but you know, someone stealing, you know, $1,000 a month from you by using the Amex card at Target or Lowe's, that's not like, we're not going to see that. Even if we're doing your bookkeeping, it's like, we're going to ask you, well, what was this for? And if someone answers legit stuff, we're not going to ask any more questions about that. So, but we can tell you what to look at, which is what I'm going to get into now. You know, if I'm a business owner and it's like, I don't like any of this accounting stuff, there are some base minimum things that I would make sure that I'm doing, you know, because at the same time, it's like out of the same mouth, I'll say, look, Gary, you need to delegate and elevate, dude. That's stupid for you to be keeping your books when you can easily outsource it to somebody, you know, so you can focus on revenue generation. It's like people take that to heart.
Yeah.
But it doesn't mean that you can abdicate the entirety of the responsibility unless you're going to, you know, leave it to hope that you don't get stolen from. So, you know, I think, you know, first and foremost, you know, periodically review your bank statement and the detailed profit and loss. You know, I'm using QuickBooks as an example. Like you can print a detailed profit and loss, which shows every single transaction that makes up an expense item. And at first you say, oh my God, that's just a lot of stuff. You know, maybe, but if you're only doing it once every couple months, you know, it's not that onerous. But just go through and just look at like, who are these people and why do I pay them? You know, if nothing else, by asking the question, you might find some stuff that you're spending money on that you should. It's like the equivalent of me at the house saying, why do we have a subscription for that again? You know, we have like, in other words, like, why do I have a subscription to collegiate soccer when we only watched one game still? One would wonder. It's a universal mystery, Jack. Yeah, it's like the ACC network, so I can watch the Chapel Hill football games on the off chance that I can see my daughter. Anyway, right. So I really hate that, by the way, stupid ACC network.
I know.
So, you know, just period, like once every couple months, and if nothing else, you know, looking at, looking at the, letting people know that you're doing that. They're like, man, well, crap, he's looking at that, you know, and asking questions. I think very similarly, you know, looking over a payroll run periodically before it occurs, you know, is another good practice. Like, who are all these belly buttons, and does it make sense what we're paying them? You know, make sense. You know, outside of that, you know, periodically looking at your accounts payable, you know, does it make sense that I owe these people this much money, you know, and the people that I'm actually paying? So just some little basics like that. asking to see the bank reconciliation, does that make sense to you, the bank reconciliation? And again, if you don't know how to do any of this, there are so many competent, whether we do it as an engagement or you hire a fractional CFO to do it, there are so many competent people that are out there that can provide it costs money, but can do that check for you. Like if you're just going to say, I'm not doing it, then at a minimum, consider spending, $1,000, $2,000 a month just to have somebody else do it, just to make sure that you got some peace of mind. But those are really the minimums. I mean, kind of the next layer would be, hey, I want to make sure that I'm the one that actually signs the checks or otherwise authorizes, if you do use bill.com, actually authorizes the payments, authorizes the credit card, stuff. I want to see, every credit card transaction that's over a certain amount, you set some dollar limits on credit card spending. Those are some other good ones. I mean, there is a laundry list. Like I don't like, it's good that Jack's client that he used in the example maintain those controls. And I think Jack also said it's unusual, because there is a cost to like trusting no one.
Yeah.
So I prefer more the Ronald Reagan approach.
Trust but verify.
Yeah. Down to nuclear deterrence, but the same concept applies. Trust but verify. Trust but have some basics of verifications versus, the old, must be all good. Still looking good around here. Down there. And I think Chris had asked the question. I suppose the company, had done an agreed upon procedure report. I'll have Jack send you a Starbucks gift card for getting wonky on that. Yeah, I mean,
there you go.
You specifically can engage a CPA firm to do an internal controls assessment, meaning like, hey, just, tell me if there's a chance somebody could be stealing from me. Or alternatively, another report that you can get is you kind of go in with the assumption that you have been stolen from. Like, hey, Gary, I think the employees are putting personal shit on the credit cards. Will you go find out? That is an agreed upon procedures report that we can do for you just to give you, we can do one of two things with that. Either A, say that based on our test, this is the least expensive version, based on our testing, yes, but we don't know how much. Or B, the more expensive part is, and this is the amount that you just got stolen.
Yeah, when everybody showed up with new Prada shoes, that was kind of a warning sign, like.
Yeah, that's right.
That's right. Bruce has a question here too. Use of company assets for personal use. How do you specify what crosses the line of reasonable usage versus fraudulent use of the privilege, such as using resources, tools, equipment for-profit business, which may be in competition with the core business? Ooh.
Just that question in of itself would bother me. So I feel like you kind of answered your own question that in my world, that's kind of the equivalent of the moonlighting policy, which is, maybe I'm good with it, maybe I'm not, but if you don't disclose it to me, we're going to have a real freaking problem.
Yeah.
I think there's variations of that. So the first part of the question about where is the line, and I think it again legally depends. But I think about things like, okay, bringing paper home to use in your printer at home and justifying it by the fact that, for me, I do a lot of work at home and print out a lot of stuff, but I'm not charging the ink back to the firm or anything like that. So, and actually I don't bring a whole lot of paper home from the firm anyway, but, or using, tickets to like CFC or to football or those kind of things. Well, is the line, and I've been thinking about this for us at the firm with those tickets, is bringing your spouse with a client prospect and their spouse okay? are you it's a kind of a date night. Maybe you're imposing on your spouse by bringing them on a work date night, so again, going back to something that we saw in one of those charts is convincing yourself that it's okay, justifying it that it's okay. And so using firm assets for those kind of things, where is the line? I think that for some of the higher end things like tickets, there should be policies in place, written policies that everyone is made aware of. But on the other things, taking a pen home or, using the firm credit card to take someone out to eat, which, who's a friend, but a prospect client or customer, you start getting into the gray area. And then that's when you kind of have to trust, but verify. And so our controller in my office is very good at that. I've had, we've worked together for over 2 decades. She was at the firm before I was. And even, last week there was some expense that I didn't have a receipt for, but it was because I ran my credit card through the machine and I didn't ask for a receipt, and I knew it would show up on my credit card statement. I would submit that. And so she came back to me and said, where are the actual receipts for 1, 2, and 3? And at first I was like, what are you talking about? I mean, in a nanosecond, I was offended, but then it was, okay, she knows me. She's doing her job. She's doing what she's supposed to do. I would rather her do that across the board for everyone, including me, so that there isn't, a problem of trust. Let's say that there's someone who she thought she could trust and was slack on that. I would rather her enforce across the board. A very mechanical way that she has done the use of credit cards years ago, when places like the U.S. Patent and Trademark Office and state filing agencies were going electronic, and they said you need to submit electronic payment and either set up a deposit account or use a credit card. She was having a lot of heartburn giving people the 1 or 2 credit cards that are the office credit cards. And so the suggestion that I gave to her was get other accounts that are used specifically either within a practice group or specifically for people who have the need for filing electronically, that are sub accounts that have lower limits, and it'd be very hard to commit fraud on those accounts. Because it would be, if it's the IP group that is filing stuff, and then all of a sudden you have a reimbursement for, I don't know, some bizarre litigation expense, then, that's a red flag potentially. So you can, not micromanage, but you can put things in place that help compartmentalize the liabilities that you might otherwise incur if it was just a free for all or one account or, one person accessing everything.
So I'm going to throw another one. I was talking to a friend who owns a number of quick serve restaurants, but also some very high end restaurants. And the high end restaurants, they still have challenges. And he goes, we got cameras everywhere. But he said, especially the quick serve, where somebody comes in, they're buying a smoothie, and somebody gives them $20 cash. The person behind the cash register rings it up, gives them the change, and then what they ended up doing is they void the sale and they pocket the cash. And it's like, a couple $100 a day that happens, and it happens sporadically. But then all of a sudden that, and also the cash drawer balances don't happen. And he said, you wouldn't believe the amount. It's just crazy, but it's just these incremental things. And I think, for each of us individually, we have to go, all right, what are the things that we can put in place? But I think we all have to get really serious about justifying behavior, because, my partner was a good guy, but he got into ends justifying the means, and it was a slippery slope. Once he crossed that line, then it just started snowballing and it got bigger, and then the repercussions were enormous. So anyway, this has been some really good conversation happening here. Anybody else, we've had 22 people on here, we're down to 21 right now, but I'm assuming that a lot of you have experienced this in one way or another. Any questions for these guys on other things that can be done, should be done, or gosh, don't do that? You know?
And Gary, while they're thinking of the questions, one thing I want to reiterate that you kind of glossed over was that, you know, we've been focusing on corporate level, you know, financials, C-suite kind of theft, but you mentioned retail level theft. And so
Yeah.
a quick war story. Several decades ago in the 80s, when I was a teenager and working in a retail establishment, there was an issue with inventory, shrinking inventory. And I didn't know anything about this. And what was happening was that there were certain employees, long-term employees, that were throwing stuff out the back into the dumpster. And then they would leave for the evening and come back and retrieve the stuff. One night, as I was there at closing, I left and went around behind the building. And as I'm driving, I see a familiar car, but it doesn't occur to me until I get about a mile away. And I'm like, that's one of the manager's cars in some strange driveway. And then it kind of started coming together. And then I didn't think anything of it. And then a couple of days later, certain employees were no longer employed by the company. And so, you know, even back then, there were ways to figure things out. There weren't cameras everywhere. So, you know, they did the best that they could to discover the fraud. But, you know, be aware also, for those of you that run businesses with retail products kind of thing that, you know, are on a shelf, that are in a warehouse, that you have shrinkage, potentially shrinkage issues. And that's a red flag as to there's maybe some theft going on. And it could be not just that the stuff is going out the door without being paid for, but the paperwork related to that is being manipulated. So it is a common way of doing that is return merchandise authorizations. It's like, oh, okay, these RMAs that basically are supposed to accompany product that goes back to the manufacturer. Well, you know, there's an RMA, but it actually doesn't get back to the manufacturer. And then, you know, with loose accounting and inventory controls, you can see how that can very easily escape management's eye as being a problem.
Yeah. You know, it could make one extremely jaded, you know, when we see this stuff. And I mean, look, there are two presidents that have committed stealing, and you know, they've stolen documents, and one of them took them documents from a skiff when he was a senator. All right. So it was like, and it's on both sides of the aisle, man. But when you get into ends justifying the means mentality, it's bad. And, you know, I'll leave you with this one. This is an interesting one. So I was talking to one of my colleagues here, and a client had hired, or it wasn't one of our clients, but somebody that he knew had hired somebody like a controller who had been caught embezzling before. So this person had a track record. The person hired them anyway, but this person that hired them had nefarious intent. And basically what they did is they blackmailed them and to doing nefarious things because they already had a ding on their record. Like, think about that. I mean, that is some wicked stuff. But and I got a call from another CPA. They got conflicted out because a controller for a former company of theirs had been caught embezzling. This controller goes to another company that these guys were wanting to have them do their tax work. They called me and said, hey, you've been sending us stuff, and we got one, but this one's got some hair on it. Here's the deal. This woman that's the controller for this company been caught embezzling. I'm like, well, does the new employer know that? Yes. Okay. Is it okay for me to have that conversation with that new employer that ended up becoming a client? Yes. So we had a frank conversation, and he had really good controls in place, really good. But he, he needed to have those in place, and he made sure, and he was kind of the guy that would do it anyway, as far as just be really buttoned up. So anyway, controls, that's an important thing. And then hiring the right people, but man, you just don't know, when you think that you know somebody, sometimes you don't. So next week, we're going to have a guest on here, CEO of, Blue Armor. I was going to say Blue Fire, but no, it's Blue Armor. And we're going to talk about cybercrime and what can you be doing, because man, manufacturing, if you guys are manufacturers out there, you are targets. Anybody's kind of a target. And I also know of another CPA firm that got shut down because of ransomware for almost a week. Not good. So anyway, that's what we're going to talk about next week. Thank you guys for joining us. Jack, have some fun out there at the Whitewater Center. Make sure you got your rain gear on. So anything else you'd say?
I'm good.
All right, guys, thanks so much. Appreciate y'all. Have a good week. Bye-bye.
Thank you.